3 months ago, Mia Carter had no idea that AI in just $100 would turn her into a real estate investor. By the end of this video, you'll know exactly how you can own a piece of some of 2026 hottest properties, starting with as little as $100, all powered by AI-driven platforms. Timestamp 030 section. Why fractional real estate is exploding in 2026. Mia is what you'd call real estate curious. She rents her apartment on the north side of Chicago. She's got about $600 in her Robinhood account, hates paying rent, but always thought owning property was way out of reach. And then one bored night on her phone, Mia saw something new: Arrived Homes, promising you could co-own a luxury apartment or vacation rental for the price of a meal. It sounded too good to be true, and as you'll see,
there are pitfalls. But in 2026, this isn't a wild idea. It's a booming market with $8 billion in fractional real estate investments reported just last quarter in North America alone. Even Fidelity and Vanguard are trialing pilot programs now. Pattern break. So what exactly is fractional real estate? Simple. Instead of buying the whole building, you buy a slice. Like owning 0.05% of a Miami apartment complex or a student rental in Houston. You still earn a share of any rental income, and if prices go up, so does your cut. But it's never just that easy. Here's where it gets interesting. Timestamp 200 section. Mia's challenge $100 experience. Let's rewind. Mia decides to test this out. He picks 3 apps: Arrived, Landa, and Fundrise, each with AI-powered market analyzers in 2026. A must-have feature if you actually want to find top performers, not hype. The rules: $100 per platform, no more. No real estate jargon, no math PhD required. Arrived pitches her a piece of a midtown Atlanta condo. Projected 7% rental yield, $112 minimum investment. Landa's AI highlights a multi-unit student rental in Dallas, suggesting a potential 1% yield but a 25% annual fee. Fundrise, a Brooklyn co-living space, recently renovated with automatic rent distribution using smart contracts. Here's the kicker: on every platform, AI now crunches local data, rental trends, and even migration patterns, way more than you'd have the time or skill to do manually. But Mia wonders, is this actually safe money? Pattern break. She pulls the trigger. 3 investments, $311 total. Now she waits. But what happened next changed everything. Timestamp 400 section. Hidden pitfalls and where AI saves the day. A month later, Mia's inbox has news. One of Landa's Dallas properties just missed a rent payment. The AI flags a vacancy spike because the local university moved classes online for the summer. Oh, Mia panics. Was this a scam? Is she about to lose years of savings? She checks her dashboard. Arrives Atlanta condo is up, small gain. Only $112 so far. Fundrise's Brooklyn rental. Stable rent hits her account automatically. $0.68 this month. But Landa's AI goes to work. It recommends selling that Dallas slice, shows a projected drop if she holds, and new for 2026, it offers a swap feature. Trader share for one in a Tampa property with rising hospital workforce demand. Pattern break. She clicks swap. Fee $0.49. Risk mitigated. Crisis. But the real surprise is coming. Timestamp 600 section. The big payoff. Did it work? Fast forward 2 months. Mia downloads her statement. Her Atlanta condo piece is now up 8.4%. The Tampa swap, it's climbed 6.9%. Brooklyn's co-living rate is up only 2.8%, but it's steady, no missed payments. Total earnings from $311 invested $13.02. That's not a lottery, but it's real money, diversified across 3 properties with just the tap of a smartphone and some AI-powered rebalancing. Mia also gets early access to a new AI feature, predictive sell alerts. Her app warns her when a property's risk spikes above 5% before the news hits, something most traditional landlords would kill for. Now Mia's got a portfolio that's small but surprisingly resilient. If she scaled this to $10,000 based on her returns, she'd pocket $418 in a year, passive income minus fees. But what about taxes, illiquidity, or the next property crash? Timestamp 700 section. Lessons learned and next steps. Here's the reality. Fractional real estate is not a magic bullet. There are risks. Properties can tank, fees add up. You usually can't cash out instantly. Liquidity windows range
From daily Landa to quarterly Arrived. Fundrise. If you want to try it, know the fine print, read platform docs, beware minimum investment/exit fees, and always diversify. But for Mia, AI made the difference. It flagged risks and moved her investments faster than she could research. And yes, she's already upped her monthly contribution to $50 across 3 apps. Not financial advice. But if you want exposure to real estate, with the flexibility of stocks, AI-powered fractional investing is finally real in 2026. Want a step-by-step demo of the best fractional app, or to see how to use AI tools to spot the next hot property market? Hit subscribe so you don't miss it. If you like this, watch our next deep dive. Best AI stock picking tools in 2026. Can you beat the market with $50?